Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of January 24th, 2016. So we're going into the last week of the first month of 2016, and what a month it's been. It has not been boring, has it? Um, I like, I always like to look at headlines and use them to draw points and maybe just poke a little bit of fun at them. So look at this headline here. I like this. It says the oil rally drives a strong rebound in U.S. stocks. So that would tell us that wow, there must have been a really big oil rally and there must have been a really strong rebound in U.S. stocks. Let's hold that thought for a minute. So here's another headline from Reuters, and it says Wall Street rally. Again, let's hold that thought. Stamps an exclamation point on a volatile week. Well, it was a volatile week, that's for sure. I'm not so sure about the rally. We're going to look at the reality here in just a minute. Let's look at one more headline. So here's one more. I don't really care about this headline. What I care about is this line here. I care about this line that the author writes here. And the author says, as the stock and commodity markets continue trying to make paupers of energy investors everywhere. That actually gets under my skin a little bit. I know that the writer's just trying to be interesting and get people to read the article, but I coach a lot of traders, and one of the things that people come into trading with, quite often is some fear of the market and even a perspective that the market is out to get them. And I hear people say things like, yeah, as soon as I take a position, it goes down and we lose money. Um, Let me promise you one thing. You're not that important. You're not that important. The market doesn't even know you're there. Unless you're trading for Merrill Lynch or a big investment bank or a big institution, they don't know who you are. They don't know you're there, and um, you're invisible. So, it gets under my skin a little bit. The market is not trying to make a pauper out of anybody. People are making paupers out of themselves by making bad trades and not using good risk control. That certainly is a reality, and that's one of the things I just like to teach over and over and over. Is I trade the realities of the market. I try and teach people how to do that, and above all that is to use really, really good risk control and to limit how much money we can lose in our investing in any given trade. So now let's go look at the reality of the charts. That was fun. So a lot in the news about oil. So let's look at oil for just a minute, and we'll get to the market indexes just a minute. So this is the oil futures contract, and there was lots of news about I put my quotation marks here, about the rally. Now it did jump up, 9%. That's a pretty big move. By anybody's standard, a 9% move is a pretty big move. But where did this come from? Right? You can already see on my screen, right? These couple little price bars here in contrast to, well, we got to get more data on the screen here to even see where the decline started. This decline, whoa, look at this, right? Where did this come from? It came from, I can get it out a little bit. It came from here. It came back in the summer of 14 at about $114. I think it was like $110. And it came down to here, where we're at now. So if we're going to talk about a rally, and from $110 down to $30, this is a blip. This is a blip. So it did move, 10% on one day, but let's keep that in a little bit of perspective. And just what's called a normal retracement. So price moves in these impulsive waves down, and then there's typically a corrective wave up before it goes down again. And so just a normal corrective wave, I got the wrong tool there, let me get the right tool. A normal corrective wave would come about to these levels here. If you've been watching, you see me do this a lot. So just a normal corrective, what's called a wave 4, up would get us to about $68. We'll round that at 70. So from 30 to 70 is over a 200% gain in oil. So is it beginning now? Has it started? I don't know. I don't know. But I'm not getting too excited about uh, this in comparison to this just yet, okay? I hope that makes sense. So did oil find a bottom? Could it be heading up? Absolutely it could. Absolutely it could. But the pattern we look for is, we've put in a low, we've come up, and now I want to see it pull back and put in a new high. This is a meaningful pattern here. And where exactly will it happen? I don't know. If it does this, then we very well could be on our way, and there may be some profits and some trade to take us up into this zone here. We're not there yet. And to get bold headlines about the rally, right, that's turned everything around, I'm not there yet. But it's fun to read, isn't it? All right, let's look at the stock market now. So let's just refresh ourselves on this headline. Oil rally drives a strong rebound in U.S. stocks. Really? Okay, so here's the rebound. That was Friday, so bloop. Where have we come from? Even from late last year down to here. Whoa, we came down to here. So we got a little pull up. I'm not sure I'm calling this a rebound just yet, right? I'm not ready to call this a rebound. Now, if you've been watching me, you know that I believe the bear market has begun. I proclaimed that on December 19th. So that would be back in here. So again, the pattern we just talked about on oil, this is going the other way. First, we had a 6-year bull run, and the market, went nearly straight up for 6 years, and that was awesome, and we made a lot of really good profit. And now that trend has matured, and we're putting in lower lows, lower highs, lower lows, lower highs, lower lows. When this happened, I said, you know what? We took out this last low. We're taking out this low. Well, we did. We did. Now, sure, it's going to pull back up. The market does not move in straight lines. It moves in these lower lows, lower highs, lower lows. On the way down and on the way up, it does, higher highs, higher lows. So sure, we're going to pull back up a little bit. I said last week that I fully expected that, and I do, and it may go more. It may go more, but it will head back down again. And I've given the projection several times in a row. I think we're going 30 or 40% down in a normal, healthy retracement from that 6-year bull run. Don't be faked out. This isn't over. We're going down lower. There's just such a high probability of that. I'm convinced of it. I'm trading that way, and we're making really, really good profit with the picks I'm publishing to my paid stock pick subscribers. It's going to continue. Will it go up for a week or 2 or 3? Sure, might. High probability, nearly a certainty that it's going to head back down after that. Put in more new lows. In fact, I was convinced that it was time for it to pull back up. I was on a panel of experts forecasting the market last week, and the question we had to answer was, do we think the S&P 500 will be up or down, from Tuesday's open till Friday's close? And I actually said I think there's a 70% chance it will be up, and it was a little bit. It closed a little bit up from Tuesday's open because I was expecting this pull up. But again, don't be faked out. The bear market's underway, and we will be heading back down lower before too long. Last thing I want to look at here is gold. Last week I talked about gold perhaps having found a bottom. It's been coming down for several years. It's been in a long downtrend, kind of like oil. It found this consolidation, what's called a channel here. It broke out of that channel. Again, higher high, higher low. And I'm saying if it breaks here, if it breaks 1113, really good chance that gold is beginning its recovery. So that's something to watch. 1113 on the gold futures is an important level, and I will begin taking trades above that level, either in gold futures, gold ETF, which is GLD, or gold mining stocks. Again, I look for the realities for good trades. I don't just jump in because I think the trend has changed. I go look for the patterns on those specific instruments that I'm trading. But I'm really watching this close, and we're getting close to, I think, gold making a pretty good recovery. And that's based on the realities of the chart in front of us, not on, just what I think should happen. And again, we're waiting to see if that reality is proved out, but it's looking very, very likely. Well, that's it for this week. It's been fun. I always enjoy watching the market. I enjoy sharing my perspective on it with you and poking at the headlines just a little bit. But seriously, use risk control, please. Always limit the amount you're willing to lose, that you can lose on any given trade. Trade the realities of the market, and I hope you stay tuned as this super interesting market plays out, and I give perspective on it. Take care.